Daljeet Singh Kohli as well joins in on the show. And Daljeet, let's get in your analysis then on the markets right now, the overall trade setup that we've been seeing with the gush of liquidity that's been supporting our markets so far. Do you reckon that it's only here to stay for some time now?
I think, yes, liquidity is in our favor, and we might continue to see this kind of volatile movements in the market for some more time. But one has to be cautious about the fact that we have already moved almost 30% in last 3 months. From 10,800 at the end of September, we are now 13,800. So this is a big, sharp move in a very short span of time. So in the beginning of December, when we wrote our piece for the clients on what we expect ahead for the month of December, so we had mentioned that we are expecting a cool-off period. So while we are not negative on the market, but we feel that probably we will see a bit of cooling off period in between, because market might want to take a pause. One, that we have had a sharp rebalancing from the MSCI. So there is a lot of buying which was triggered because of that. There is a lot of expectation from Fed, from the US government on the fiscal stimulus. So all those things will pan out. We will have to wait for probably in next 15 days to 1 month. So I guess it is better right now to go a little cautious, and wherever you're getting profits, you should book out. Risk-reward ratio probably for the new fresh trade here is not very conducive. So we are expecting probably a range of this 400, 500 points movement in this month. And then future direction will decide from once this vaccine things come out, once the federal, this US government stimulus comes up. So January will take a fresh call. Probably I think this month it should be more of profit-taking mode.
You've got the 810 crore rupee Burger King IPO. It's going to list Monday, and there's been massive response, oversubscription of 157 times, retail investors as well, seeing a subscription of over 868 times. What do you make of this company, looking at the entire QSR space, the competition, how they've managed to pivot during COVID times? And do you think that everyone should definitely be getting a bite of this IPO?
Yes, we are very positive on this segment as such. In fact, in our portfolios, we have Westlife Development, its nearest competitor, MACD. So, and we feel, I think they had priced it very attractively. Plus, the timing was in their favor. At this time, people are in a mood to take on risk, to take, because markets are at the peak. So everybody is in a mood to get this party, to join the party. I think that is why they have got such a good response. And the pricing itself was quite attractive. So I think in terms of fundamentals, both the companies are equally good. We have had a positive view on Westlife for a very long time. And on traditional parameters of valuation, you will find all these companies to be costly. But then you have to see the potential, you have to see what kind of numbers they can generate over a period of time. So for next 3 years, 5 years, these kind of things should be looked in that perspective. So we are positive on both the stocks. Currently, we have in our portfolio McDonald, which is Westlife Development.
It's are sliding. I mean, we're still okay on the index, relatively speaking, but we have taken a knock off the day's high for sure. Just taking a further look at some of the weakness. We've got Axis, Divis, TVS, iShares, some of the names on the downside, DRL. Comes to the energy majors like a BPCL, for example. No deep cuts, but that's perhaps where some of the lag is coming from as well. What continues to move higher is, of course, as we've been discussing, ONGC, GAIL, and a couple of the PSUs as well, Steel Authority, NTPC, PNB, so on and so forth. Okay, we're going to be heading into a fresh week now, Kunal, as we kind of head in towards the last half of December just to understand better if it's feasible to anticipate much more of an up move from these levels. 13,400 or roundabout is where we've been at. And do you expect perhaps us to enter somewhat quieter phase before we see something trigger a further leg up?
So it's possible, about that we may go through quite a kind of a phase for the markets, and I think that could be a prudent enough, decision from all of those guys who have been in the markets, or who've been long in the market since last at least couple of months, if not more. Because such a kind of a steep rally is very, very rare to see by. So, when we look at the historical charts, rarely do we see, such kind of overbought natures of RSI. So RSIs from 80, 85 to 90, 95 for RSIs into many of the stocks. So it's very, very difficult to see these kind of reactions from the stocks. But nevertheless, I think at 13,500, because the markets have so much to grapple into, and this is not just a domestic rally. You look at the global charts, look at Nikkei, look at Kospi, look at Brazil, look at so many of these other stocks, other indices on the global charts. There is a big breakout on many global charts. Many equity indices are at 10 years high, 15 years high, and when you see such kind of a price action, it's not just a temporary phase of a mild bull rally. It gets converted into multi years of bull market, because these indices have been going through downward trends for last, I think, 5 years, 10 years, 15 years in many cases. So I think this is a big global kind of a rally which is shaping up. You might have those odd periods of mild consolidation in between, but net, I think as a longer term bull, I think these are fabulous times to stay invested as such. As I said, short term charts indicates overbought nature, so you might have those odd periods of correction. And also, I think more important than the index correcting is the stock specific churn, and that's the phenomena which we've been accustomed to since last 1-2 weeks as well. That there has been a consistent churn in the market. You see one sector going up, and then all of a sudden that momentum in the sector just drops down, and you see completely a new range of sectors which starts to move up. So I think net, it's a sign that the markets are consolidating, and also from a longer term charts, we are ready to move up higher.
Sure. Okay. Daljeet, since we're looking at the longer term, we've also been talking about staples. They made a bit of a rebound this week. Do you see any opportunity there? I mean, I know they're possibly better or more attractive stocks in the market right now, but what would be your current position on some of the staples?
We have a positive view on most of these companies. Because they are already not one that they are normally priced to perfection, so they don't give you too much of comfort on the valuation. And second, the appreciation in other stocks is normally relatively better, so therefore you tend to prefer the other sectors or other stocks. But if somebody wants a conservative portfolio, I think these are all good stocks. One should continue. Within these staples, Unilever and Nestle are the two preferred picks. Somehow we have been avoiding ITC for quite some time, although in the last few days it has performed. But we thought that probably Unilever and Nestle both have shown much better capital efficiency, much better market resilience than what ITC has shown. Although relatively speaking, ITC has always traded at much lower valuation. So our preference has been Unilever and Nestle, and we continue with that.
Let's also get a move on then and focus in on the auto space in greater detail. We've got the SIAM data that's out, which has spoken about the passenger car sales as well as two-wheelers, utility vehicle sales, and the year-on-year growth. My colleague Utkarsh Chaturvedi joins in to sum up all that data. And Utkarsh, going by the numbers, there has been a decent growth year-on-year.
The SIAM data for the month of November is out. What is it telling us? It is telling us that the car sales are up, the two-wheeler sales are up, scooter sales are down. That is a concern. Now let me take you through the numbers. Now first, passenger vehicle sales are up by 16.95%. That's a good number really coming in. Then let's say two-wheeler sales, a growth of only 3%. Scooters on the other hand are down by around 5%. Now let's look at since lockdown what has happened. Since lockdown, the car sales are still down 20%. There's still 20% scope and lesser cars being sold. In terms of two-wheelers, we are still down 25%. The sense which you will get when you look at these numbers is that in the month of November, car makers have slowed down the dispatches. Why are you not feeling it in the numbers? Is because last November was in Diwali. Diwali was in October, November was a weak month. This November, we had Diwali coming in, and that's why you have the Dhanteras sales adding to it as well. So after adding the Dhanteras sales, is the number looking as good as it was? Maybe not. And that can be a worrying sign, especially for the two-wheeler space. A mere 3% growth in that motorcycles up 5%. If you look at top two-wheeler manufacturers, they have slowed down production in November. We have been told they'll continue to do so in December. But for car makers, it was good Diwali and it looked like a Merry Christmas. We have to really wait and watch for the December numbers and then the inventory levels in the two-wheeler and four-wheeler space to get the correct idea.
Thanks very much, Utkarsh, for giving us those details. Daljeet, wanted to get in your take as to how you've assessed the overall performance of the auto companies. Where is it that you're sensing potential? Do you believe that the price hikes that the companies are undertaking will bode well in the long run when it comes to their overall business? How are you looking at the SIAM data for the month of November as well?
I think we'll have to wait for some more time. We were cautious on this segment, although last 2 months numbers were coming very good and stock prices were showing as if everything is back to normal. But now we come to know that actually most of these things were pent-up demand. And that was our apprehension also, that probably we are seeing these big numbers, mainly because of demand being clubbed together for last many months. So sustainability of this demand is a little doubtful. Two-wheeler manufacturers are already confirming that they are seeing that downturn in their demand, and in fact 100cc bikes are not seeing any kind of pickup. On cars, still things are slightly better, but we will have to wait for some more time. We are still not buying anything in autos. Tractors is the only area which is doing very well, and that has shown consistent performance. But again, there we will have to wait because 2 or 3 months it has been doing well. But will it continue, and how much it will continue? So I guess in autos, we would suggest, if somebody is holding, if this is the time to book profit, and we wait for better entry points. If there is some value, it will be in the auto ancillary side. So companies like Varroc or Endurance or even Bosch, those kind of companies one can look for. There you might get some valuation comfort, but we'll have to wait for some more time.
Okay, fair enough. Waiting to gauge what the outlook is going to be when it comes to autos. Kunal, you've been particularly optimistic on the likes of Tata Motors, Bajaj Auto. What's the outlook right now on the auto space? We're looking in today's trading session, if we had to look, the names like TVS, M&M, Motherson, they're under a bit of pressure, but it also, reports seem to indicate that the two-wheelers are really riding in high, and that the potential for growth looks very strong basis the kind of sales numbers they've clocked in.
Absolutely, Avan. So I think this is the one of the few sectors which has emerged very, very well in terms of charts on the last 7-8 months of this market rally. So what started from the month of March end was very few selective large cap auto stocks which did pretty well for themselves. So it was led by Hero MotoCorp, and then you had Eicher Motors, Maruti, Bajaj Auto moving in the second leg, and then you had the third leg where you had likes of Ashok Leyland and Tata Motors picking up pace. Now all of these three phases were marked by very strong bouts of buying into these spaces, into these stocks particularly. Now you're seeing Hero MotoCorp, for example, going through consolidation. Eicher Motors is range bound, but you still have some follow through momentum in likes of Ashok Leyland and Tata Motors, etc. So these are all ingredients of a very strong sector rally, because the markets clearly have defined the kind of leader set of stocks and then the ones which have been following. I maintain the bullish stance which I have on a lot of these auto stocks, and I for one believe that what we've seen the last 7-8 months was a very minor kind of a breakout on the longer scheme of things for these auto stocks. I think they're bound to go through some bit of a rough patch or a whipsaw range for some more time. But I think for a longer term trader, that should be used as a very good opportunity to try and buy. So I think something like Bajaj Auto, as I was explaining, I think a couple of days back on the chart busters as well, has managed to come back into strong breakout modes. Tata Motors has confirmed a big breakout on the long term charts. Eicher Motors is also doing some very interesting stuff on the longer term chart indicators as well. So there are a lot of stocks on the offing from the auto pack, I think, which is why it makes the sector very, very interesting.
Okay, Daljeet, let's get your view on some of those aviation names with crude also trending higher, a lot of buzz. The stocks are moving also. We had earlier traffic numbers getting better, a nod for higher capacity also coming in. So all of those factors stacking up. Indigo, in fact, saying they were going to reach 80% domestic capacity by the end of the year.
See, first thing for me, this sector is more of a trading call, less of an investment call. Why? Because it is highly susceptible to crude prices, highly susceptible to their own costs. So normally, today we are all talking of 80% they will start using their capacity, and therefore it is such a good thing that stocks have moved from 800 to 1800 in Indigo, so and from 40 rupees to 100 rupees for SpiceJet. But when they were already running at PLFs of 90%, 80%, they were never making money. So that is purely because of the inherent problem with the business model, where they have a lot of costs which are too high for them to absorb. And secondly, if there is any change in the crude price, it becomes very difficult for them. Till crude remains 60, under 60, probably things will be okay for them. They might be able to manage. But beyond that, it will become difficult for them. And secondly, running on 100% capacity or running on high PLFs, that they have already been doing. So there is nothing new on that. I guess the stocks have already factored in all the positives. So this is the time to book profits and move out of these. That play under that catch-up play has already been done from very low levels. They have already moved to fresh ice. So from here onwards, probably maybe another 5-10% they can move up. But then any negative trigger on crude or once the numbers start flowing in, then people will realize that actually even though they run at 100%, but they don't make money. So when ultimately if the profit or earnings don't come, then stock will see that cool off. So I guess this is the time to get out, take the profit out, and maybe look for other sectors like capital goods, which have yet to catch up, or infrastructure, or even banks, BFSI segment, insurance. All those segments still have some room to play. So it is better to take some profit from here and move into those.
Okay, so that's Daljeet's view coming in on that. Some of the auto names cooling off a little bit today. Kunal, a little bit of a lag coming in on some of the two-wheelers in particular. I mean, this is despite the latest numbers. What's the trend looking like for some of the two-wheeler names going forward?
Yeah, I think I saw TVS Motors to be down, I think 3.5%. But Bajaj Auto, I think, was some of the other stocks which is still in a positive territory. Hero MotoCorp had a good I would say first half of the day, where the stock was up almost some couple of 1.5 percentage points, and then it cooled off. But I think this is largely going to be the theme for the markets, that you may have very difficult sort of trends in terms of identifying the exact set of stocks from the sector which could move up higher. But the net the sector overall could do pretty well. So you might have one stock or the other set of stocks which could do pretty well on a single day, and some of the other stocks from the same sector, they could move up higher. So I think that's largely, I believe, that the construct for the sector is. I believe even for the auto stocks, it's a very very similar kind of a texture. The likes of M&M, Maruti, I think yesterday or day before, touched that 8,000 mark. Many of these stocks, they have broken past their psychological resistances as well, some round figure numbers, and generally when that happens, you generally expect some bit of profit booking which could take place into these names. So I think it's a routine profit booking, at least it looks like as of now, because of the pace of correction being very, very slow and shallow into these stocks, which is why I believe that it could be just a routine profit booking, which may remain for some more time. The stocks may consolidate, go through a downward drift, come back to their mean reversions, and once the market peps up into action once again, I think all of these stocks could probably see one more round of strong buying.
Okay, we'll let you go on that note, Daljeet as well as Kunal. Many thanks for joining in and sharing with us your market outlook.